Hey, good morning, everybody. Welcome to another episode of Benzinga All Access, brought to you by Ticker. If you've never tuned into this show before, let me tell you what it's about. My name is Spencer Israel. This is the show that we do once a week where we step back from the markets, step back from the opening bell, step back from the charts and the technicals and the stocks and all that stuff. And we actually take some time to talk to C-suite executives about their companies, right? What makes their companies tick? Where have they been? Where are they now? Where are they going? Okay, so this is your chance to basically get time with C-suite executives, CEOs, CFOs, etc., and your chance to ask them questions. So what I'm going to do is I've got two companies lined up for today's show. I'm going to talk to them, each of them in a 20-minute segment, and we're just going to have a nice casual conversation, right, about their business, about how that business should perform in a recession. That's the title of today's show, obviously, and about where the growth is coming from, what are their headwinds, what are their tailwinds, and we'll do that. And then I will always save time at the end for questions from the chat. So I really do encourage participation from you. If you have a question, please don't be shy. Ask away. So two guests or two companies we have on today's show. Inspro Technologies. We have their president and CFO, Joe Hayon, joining us here in a few moments. And then after him at 9:40, I'll be joined by Nick Hugh-Jones, who's the Chief Commercial Officer of Mawson. They actually just had a bunch of news. They've had a bunch of news come out in the last week, so we'll talk about that. Before I bring on Mr. Hayon, some quick announcements to make. Number one, you know what I'm going to say? Hit that like, right? Smash that like button. The likes do help us. For whatever reason, YouTube placed an important a lot of importance on likes in their algorithm. So likes do help us. They help more people find the show. I don't do it for my health. I do it because it really does help the show, and it's a way you can support us. So that's the first thing. Second thing is this show is a sponsored show. So we have a sponsor for this show, but it's also a sponsored show in that every company that appears on this show has paid Benzinga to be here. However, and this is the rub, right? These companies do not know what we're going to talk about. They don't know what I'm going to ask them. They don't know what you're going to ask them. Obviously, how will they know what you're going to ask if you have a question? Everything is fair game. Okay, everything is fair game. Just be respectful. I'm not going to ask a disrespectful question, obviously, but if you're respectful, I will most likely ask your question, provided we have time. So just so you know that going in, this show is one of the ways that Benzinga monetizes our YouTube channel. The third thing is this show also has an overarching sponsor. That sponsor is Ticker, Tiicker. If you have no idea what Ticker is, well, watch this.
What is Ticker? That's right. Ticker with two I's, just like you, because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
So to learn more, you can go to the link that's on the screen, tiicker.com/Benzinga. You go to that link, you register for an account with Ticker, you connect your brokerage to that account, you do those things, and then after 30 days, Ticker will send you a $20 Amazon gift card. And in addition, you get the perks of being on the platform. Again, the whole point there is you get rewarded for owning stock. So for example, just hypothetical situation, you own Starbucks stock, you can get some free coffee. That's how it works. So thank you to Ticker for their support of today's show. And then how are we doing in the chat? Let's take a quick look at you all. Obi, what's up, man? How are we doing? Who else we got here? We got Donna. What's going on? What's going on, everyone? How we doing? All right. I think we should probably go ahead and proceed with the programming here. Again, a relatively short show today, only a couple of guests, but I'm excited to talk to them both. So maybe I should rip our intro and bring on our first guest. Here we go. All right. So as I said, our first guest is Joe Hayon. He is the president, CFO, and co-founder of Inspro Technologies. Actually, before I bring Joe on, I have a quick video to play that talks about what the company is working on. So let's go ahead and cue that bad boy up right now. Wait, I'm being told that the video has no audio, which is my mistake. I can fix that. So give me 1 second, and I can start us up with some. It might be able to help if you actually heard the video, right? That's probably helpful. All right, my mistake. User error. Let's go ahead and try that again.
Inspira introduces the ART system, an early-stage extracorporeal respiratory support system. Patients whose blood saturation continues to decrease despite non-invasive ventilation leave no choice to their clinician who placed them on invasive mechanical ventilation. The ART is a solution designed to minimize the need for invasive mechanical ventilation while the patient is awake and spontaneously breathing. Let's explain the blood circulation process. Blood that contains low levels of oxygen and a high concentration of CO2 is generated from the body's cells. The blood moves to the right side of the heart through the lungs to get rid of CO2 and pick up oxygen. Then returns to the left side of the heart, ending up in the left ventricle. And from there, travels to the rest of the body. The ART is administered just before the blood enters the right atrium. With a short dual lumen cannula and a low-flow hemoprotective approach, the ART oxygenates 1 liter of blood to rebalance the patient's oxygen saturation levels. 1 lumen of the dual lumen cannula is used to withdraw blood that is deficient in oxygen and enriched in CO2, while the other one is utilized to deliver oxygenated blood to the body. Since the ART is designed to be applied during a non-invasive ventilation stage, it potentially minimizes the need for sedation and induced coma required for non-invasive mechanical ventilation. To prove our technological approach, we conducted animal studies using swine whose anatomical characteristics and cardiac output are similar to those of humans. The studies included 20 consecutive observations with a blood flow rate of 1 liter per minute. For the purpose of the studies, the swine were mechanically ventilated and anesthetized. We induced hypoxemia until the oxygen saturation levels reached 85%. After activating the ART and enriching just 1 liter of blood with oxygen, the saturation levels in the pulmonary artery increased on average by 26%, and in the carotid artery by about 8 to 10%. The average reduction of CO2 was about minus 5.6 millimeter mercury, and the average increase in PaO2 was 13.8 millimeter mercury. Animal studies demonstrate ART's unique capabilities to oxygenate and remove excessive CO2 in a significant manner. We would like to tell you more.
All right, let's bring on Joe Hayon, as I said, the co-founder and the president and CFO of Inspro Technologies. Joe, welcome to the show. How are we doing today?
Thank you very much. Good morning, everybody.
Okay, so that video gave us a nice preview, but maybe you could just back the truck up for a second. Just back up a couple of steps here. We'll talk about the ART program in just a sec, but what is Inspiro really focused on?
We're focused on providing products to potentially prevent the need for mechanical ventilation. So just to put that into perspective, many patients today suffer from acute respiratory failure, and they're being admitted to hospitals, to intensive care units. And often the doctors will provide them with some kind of oxygen supplement, nasal mask, and it just doesn't work. In many cases, they continue to deteriorate. Now, the only option that doctors really have is to go and place the patient on to intubate them and to place them in a coma and connect them to the mechanical ventilation machine. So we plan to come in at an early stage and provide a solution that bypasses the lungs, directly oxygenating the blood, removing CO2, and therefore providing a bridge and a window of opportunity for doctors to take care of the underlying medical problem. And so if we can succeed to do this, we can actually prevent many patients from being placed on mechanical ventilation.
Why hasn't this system been done already?
So I think there's a few things. Obviously, there's technology involved there. I think firstly, it starts also with the approach. We've always been taught that if an organ is not functioning, let's shut it down or let's replace it. And that's what invasive mechanical ventilators do. We have a different approach. We have an approach whereby we believe that we can work with the sick organ, with the sick lung, by bypassing it and working directly into the blood. Now, working directly into the blood with small volumes of blood it requires technology, it requires a know-how, and this is something that Inspira is working on and providing a new standard to bring and provide a new standard of care.
All right, so let's talk about where you are in the process, in the development and the approval process here.
Right. So, firstly, very important, we have two products. We both have the ART and an ECMO system. For the ART itself, we are working on the development. We will be submitting for FDA submission in the second half of 2023, submitting what we believe will be the first system that knows how to oxygenate the blood and remove CO2 on very small volumes of blood. In the meantime, we are also working on an ECMO, which is a system that also oxygenates blood, but it's done as a last resort, a salvation treatment for highly acute critical patients. And this will already go through a submission process in the first half of next year. And it's much shorter. I expect it to be a much shorter submission process, potentially close to 510K. And this will already allow potentially to position Inspira amongst other medical device companies in the ECMO space.
How long has this? Well, I guess, yeah. I mean, I guess did COVID change the whole timeline here? I mean, we're talking about intubation. I mean, that's been a lot of people have been intubated, unfortunately, in the last couple of years. Did COVID change the timeline at all for you, or change anything about this?
Well, sure. Well, we set up the company before COVID, but COVID definitely helped to explain the need. There are about 20 million people prior to COVID that are being placed on invasive mechanical ventilators. There are millions every year. COVID just emphasized the risks and complications with the current standard of treatment being invasive mechanical ventilation and the need to find new technologies and new solutions. So we've received a lot of attention by the medical community, the medical industry, and of course, there's a lot of interest in what we're doing in order to reduce potential costs and provide a solution that is scalable, more affordable for a growing problem, despite the fact that we're off the COVID. This is a growing problem.
How or why is it more affordable?
Well, invasive mechanical ventilation, ECMO, these are very expensive treatments, not only the equipment, but the cost of treatment. It can cost up to maybe $50,000 for the first week of treating a patient on invasive mechanical ventilation. They're often vulnerable to complications, which extends hospital days and additional costs. Now, we're talking about a treatment where a patient is awake. So it automatically will reduce days because you don't have to go through the rehab process to waken them up, for example. And that's without even the direct benefits, potential benefits.
Okay. And what is the, like, as far as the market size, is this like anybody that has the potential to be intubated ever? Is that what we're talking? Like, how many million people are we talking about here?
There are about 20 million people worldwide that end up being placed on invasive mechanical ventilators, millions in the US alone. So this is a very big market. It's a multi-billion-dollar market. It is growing because of the prevalence of increased diseases, pneumonia being more common. So it's not only COVID. There are lots of things here that are impacting and growing, unfortunately, this sick population group.
Let's talk about financing and funding. Obviously, developing new drugs and new medical technologies is a very expensive proposition. So where are you on that front? Will you need to raise more money down the line, et cetera? Okay,
so we're very fortunate that the company is well funded. The company entered the year with $23.7 million. We submitted financial reports yesterday showing that we ended up for the first quarter of 2022 with $21.7 million. So you can kind of work out what our burn rate was for the first quarter. So based on that, you can understand that we have sufficient fundings for 2022, way into 2023, maybe even beyond. It depends on several factors. The company already is submitting 2 systems next year, or planning to submit 2 systems next year for regulatory approval. The one being a Class 2 510K, which normally takes between 3 to 9 months to get approval. But again, that's based on FDA approval, so we have to wait for that. And of course, the second system will have a bit of a longer approval process because it will go through human studies. So at some stage, yes, the company will be required to do additional capital raise, but it's not around the corner. We are well funded to take us through this period.
Are there any partnerships you have or are pursuing, or any steps along, because along the regulatory pathway there's various incentives, and you can do things like file for accelerated approval and things like that for at least in the US from the FDA. Are there any partnerships or anything from the government, anything along those lines?
Right. So we've already we have agreements with 4 distributors in Europe, in Israel, and in the US for targeting revenue of up to $400 million. Of course, these are targets based on us completing development and attaining regulatory approvals as required. So we already have some good traction, some good distributors that are putting their money where their mouth is, interested in working with the company, showing great interest, and they're working together with us on different elements. Secondly, we are very transparent and very talkative in a sense.
Wait a minute, Joe, I lost you there for a second.
Medical device companies, manufacturers, the medical community. So we've done this in the past. We continue to do this. We think this is strategic for the company. And it's good that the industry and the community get exposed to what we're doing, get behind us so that we can come and impact and provide a very scalable and affordable solution to millions that are in need.
Are you pursuing such distributors in the US as well? We lost Joe's internet connection. When we tested it yesterday, it was fine. So internet connection appears to be a little spotty this morning. And there he goes. Let's see if we can get Joe back here. And now he's gone. All right. We lost Joe. Well, I hope he comes back at some point. because I wasn't finished having my conversation with him. I am keeping an eye on the chat. Do not worry, everyone. I see you. All right, I think we got Joe. We got you back now.
Thank you.
Yes, we're back. All right. I had asked you, so you had mentioned European distributors. What about in the U.S.?
So in the US as well, we have an agreement with the distributor for several states. This is the first step for penetrating the market. I do want to emphasize, just for everybody to understand, we have a product that could be a solution for millions of people. The current solutions are extremely expensive, extremely costly. They put a lot of burden on the medical system, both financially and both with regard to staff. So it, in a sense, bringing a system that allows you to treat a patient at a much earlier stage, and therefore also allowing for it to be deployable potentially not only in intensive care units, but also in smaller hospitals, urban areas, rural areas, and maybe in the future other clinical settings.
I liked this slide as well from your investor presentation, which just kind of showed. I mean, in some respects, I mean, as people get older, right? This is unfortunately a part of life as you people have respiratory problems, and this is in some ways a bet on just population aging. Oh no, I think we lost Joe again.
I'm here.
Joe, we have you? Joe?
Yes.
Are you still here?
Yep.
Okay. I think we lost you for a second. I was just saying, I brought up the slide there. Like in some respects, in some respects, like this technology that you're working on is just a theoretically, as the population ages, we'll only need more of it.
Correct. There are many things here. There are more and more people with diseases like COPD,
right?
Over 70 million worldwide. There's a growing elderly population. There are more and more people contracting pneumonia. So the population is only growing and growing, and it's going to be impossible to put so many people on invasive mechanical ventilation. It's going to be too expensive, but it already is too expensive. It's going to exhaust the medical system, healthcare budgets, and therefore there's a need for a new technology that can reduce the time of treatment, the period of treatment, reduce risks, improve reimbursements for hospitals, and therefore allow for high-end acute treatment to be available in a much larger variety of medical locations and healthcare centers and clinics.
So I've got the timeline up, and you kind of talked about this already, Joe, and just to be absolutely clear, we're really not expecting any new data until the first half of next year, correct?
We will not. We have a submission. We have a milestone that is a submission for the first system in the beginning of 2023. I think what's very important is what we have there on top there, and that is that we're a very active company. So like we've worked throughout 2022 and 2021 to create traction with business, with distribution agreements, we continue to work and extend our capabilities and our connections with the medical industry, working on different areas. We are very, very commercialized. It's very important the market understands that we are a very commercial opportunity company. In other words, we believe that it's all about building a company and building the infrastructure for commercialization. And on the back of this, to launch highly technological, advanced systems, products to fulfill unmet needs. So we're working on building the company, on creating the infrastructure, and in order so that we will be able to launch these amazing products when they're complete.
I was hoping you could speak to this slide as well. Just explain the pricing model and how that. I mean, we sort of addressed a little bit. You said we talked about the affordability of it, but can you just talk about the model here, how you actually make money?
Right. So in a sense, what makes our system very unique is not only the fact that the patient can be potentially treated when they're awake without coma and have movement, something very different to what you'd have with a mechanical ventilator. The system itself is designed around the staff, around the user. It has a plug-and-play cartridge. It removes a lot of the complications with operating systems that would exist today. Now, our income model is really based on disposables. So we could take the system, which has a very competitive cost. We will probably bundle it with the disposable kits. But our goal is to try to deploy as many systems as possible, removing any difficulties that hospitals would have with budget, and therefore mainly be selling disposable kits, one kit per patient per treatment. And you can just understand, just to give you kind of a direction, there are millions of people there that are being treated every year. So potentially with about 10 to 15,000 systems out of 100,000 mechanical ventilators that are sold every year, just understand the relation. We would maybe be able to treat a couple of 100,000 of patients once we have full penetration adoption of our system. That in itself could maybe reach hundreds of millions of dollars in income without even really scratching the surface of the potential of the entire invasive mechanical ventilation market. So we have a razor blade model based on disposables. I think this is also not just a paradigm shift in our technology, but a paradigm shift about how to penetrate the market.
I guess one of the last things, Joe, before we wrap it up here is obviously a lot of investors in public companies and in private companies, and a lot of executives are concerned really about the immediate future here, just from an economic standpoint. And obviously, a company like yours is a high risk, high reward type of situation. Can you just speak to how you're prepared for potential economic downturn and what effect that would or would not have on your business once we get approval, assuming we get approval, right?
Okay. So thank you. So firstly, we raised money in 2021. We raised we had a raise of a pre-IPO of 9 million. We raised another 60 million at the IPO. We exercised, or the investors exercised warrants for 9.4 million. And this allowed the company to come into 2022 with 23.7 million. And you can see that in the first quarter, we burned $2 million in 3 months. So you can understand that we have runway. And I think we are very lucky that we have runway for this year or next year, and who knows. Now, we have products already next year that are going through the submission process. So that will get us along as well. And again, the company is also working towards commercialization pathways, and they too could maybe create the opportunity for strategic agreements. We even mentioned that when we talk about strategic agreements, they may even include strategic investments. So we are thinking about this all the time. Now, but as a company, like every other company, you need to manage your costs. You got to make sure that you're pushing very hard to meet your milestones. Because the most important thing now for a company to do is to manage their financial resources properly, but push hard towards those milestones. And I think that in turn will give a very positive trend to the market about what our company is about, how serious we are about delivering what we promised to deliver. And I think this, in a sense, together with commercial opportunities that we plan to work towards, I think that's only just emphasizing and positioning us, going to position us in a very strong manner in the market. Now, I do want to emphasize that in the first half of 2023, we plan to submit our ECMO system for FDA approval. Now, there are only a handful of the largest medical device companies that have been able to bring an ECMO into the market, and most of them have been through acquisitions. So we're already going to be planned to already be positioned in the very close future in an arena amongst the largest medical device companies. And I think that will give us a lot of merit and a lot of traction and provide the market with more understanding about what we can do.
All right. I mean, I wish you the best, Joe. As you said, it's not an easy thing that you're doing. So I look forward to seeing the data when that's out next year. Joe Hayon is the CFO, the co-founder, and the president of Inspiro Technologies. Joe, I appreciate you coming on today.
Thank you very much, Israel.
All right.
Thank you very much. Keep up.
All righty. Hey, let's drop us a like if you enjoyed the conversation. I appreciate talking to Joe. It's, I think, our second time ever speaking. And again, we're all about bringing emerging companies on this show, companies that you probably haven't heard of, companies that don't get a lot of attention, don't get a lot of buzz, but are nonetheless working on really interesting projects. And there was one right there, right? So that's an unmet need that was made worse by a pandemic that, as Joe said, there's been very few companies that have been able to do what they're doing. working on. So wish them the best. And again, Inspro Technologies is the company there. Let's move on here to our second and actually final guest of the day, Mawson Infrastructure Group. I've got my man Nick Hugh-Jones here. He's their chief commercial officer. This company has had several, I would call big headlines in the last few days, and I got a lot of questions about them. So, Mr. Hughes-Jones, welcome to All Access. How are we doing today?
Hey Spencer, how are you? Thanks for having me again.
Thanks for coming back on. So, just in the last week, I don't even know where to begin here. Let's start with this. This was the headline I find most interesting. You have partnered with another firm, and you've created a big. Actually, no. Before we get to that, explain Mawson Infrastructure Group for people that don't know, the people that weren't here last time. Explain what you do.
Yeah, for sure. So at Mawson Infrastructure Group, we are a Bitcoin mining company and hosting company. Listed on the NASDAQ, the code's MIGI, MIGI, market cap's $180 million. We have 5 Bitcoin mining facilities around the world. Most of them are in the USA, i.e. 4 of them are in the USA, Georgia, Pennsylvania. We just signed a new facility in Texas earlier this week. And then we've got another site on the east coast of Australia. We mine Bitcoin, so we produce around 8 Bitcoin a day at the end of this month. So it's $88 million a year in annualized revenue. And we also have a very large hosting co-location business. So like a traditional data center where we make a margin on power.
Okay, since you mentioned Texas, that's where I'm going to go next, because you announced that a couple of days ago that you are building a new mining facility in Texas. I think you said set to open. I'm going through the production is set to begin now in Q2 now, operational by the end of this year. Why Texas? What is it about that? I mean, you're an Australian company, right? So you mentioned a few states there, Pennsylvania, Georgia, but why Texas?
Yeah, so look, we've got about 55 employees at the moment, and 90% of those are actually in the USA, and 90% of our operations revenue, cash flow, EBITDA comes out of the US. So we have a couple of Australian executives, but for all intents and purposes, we are an American business. So we're going to Texas. Of course, we're going to Texas.
Everyone's going to Texas.
Really deal, right? We've so it's 120 megawatts, which is a big facility. That's a lot of energy to be drawing. But what we've done is we've partnered with a company called Texas Pacific Land Corporation, PPL. They're New York Stock Exchange listed, about a 10 billion market cap. One of the largest landowners in Texas with 880,000 acres of land. And historically, they do sort of surface leases for oil and gas companies and derive royalties off that. So we've done a similar deal with them. And why it's such a great deal, I mean, apart from being in partnership with such a large and well-respected company, is that we're online quickly. So getting 120 megawatts online this calendar year is quite unique in the Bitcoin mining industry at the moment because there is an absolute shortage of energy infrastructure around. So we're really pleased to have been able to announce that one. We've been working on it for a while now.
What will that do to your hash rate?
So 120 megawatts can accommodate 4 exahash of Bitcoin mining, which is probably 4 exahash today would be about 15 additional Bitcoin per day produced. So what's that? About $200 million in annualized revenue. So it's a big site. And we're looking forward to getting on the ground there. So site works will begin in Q2. So later early next month, I beg your pardon, in June. And then the site will be operational in Q4.
And then just from an energy perspective, where is that energy coming from? Is it going to be carbon neutral? It's been a hot topic of conversation last year or two in crypto mining land. So can you just address that?
Yeah, for sure. So we are basically a nuclear miner. So in Pennsylvania, we've got 100% nuclear energy. We've got a deal there with Energy Harbor, which owns a nuclear power plant about a mile from our site. In Georgia, we're on the grid, but we're predominantly nuclear energy there, nuclear and hydro. In Texas, we'll be grid tied. So we will be sort of a lower mix of carbon-free energy. It's around 55%. But what we do, Israel, is we actually buy carbon credits for all of our residual carbon footprint. So in 2020, we bought offset 22,000 tons of carbon and supported a bunch of biodiversity and wind projects in developing nations as part of that. And we'll be doing exactly the same in Texas so that we keep our sustainability and green goals intact.
So this is obviously your latest mining facility that you're announcing. What is the appetite, desire, and or financial ability for more?
You mean in terms of what could we have on that side in terms of hosting operation, or in terms of?
Well, I'm just saying, like, for future facilities. I mean, do you have a pipeline there? Do you have a roadmap?
Oh, I see. Yes, absolutely. So we've now got 470 megawatts of contracted energy infrastructure capacity, and we've got a 1 gigawatt pipeline. And it's not a fairy tale pipeline. That's where we're back and forth on a commercial lease, or we're doing analysis on the site. So we're down the path on those. So we've got a huge amount of energy and energy infrastructure, and I think it's something that makes us really different from a lot of other Bitcoin miners out there. We've really focused on the infrastructure piece from day dot. Our chairman's a guy named Greg Martin. He ran the largest energy business in Australia. He was there for 25 years. So we really think about this industry as an energy and an infrastructure game. And so we've got one of the largest energy pipelines of all NASDAQ listed Bitcoin miners.
Before I move on, I actually do want to address this question from the chat because it's relevant to what we were just talking about, and then I want to get to the other news that you guys just had. But Obi wants to know if you own your power infrastructure, or if there is a company model based off working with partnerships.
Yeah, that's a good question. So I'll give you the example of our Australian facility. So we've done a deal with a company called Quinbrook Infrastructure Partners. They're a multi-billion-dollar green energy infrastructure fund. They own 17 gigawatts worth of assets in operation and development around the US and Australia. In Australia, we're co-located next to their biomass facility on the east coast of Australia, just outside a town called Byron Bay. So you have a power plant, and you've got our modular data centers right next door to it. In Georgia, we're on the grid, so we're grid tied. And then in Pennsylvania, we draw our energy via contract with Energy Harbor direct from the 3 nuclear power plants that they own. In Texas, we're on the grid. But look, the holy grail in this space is to own the energy generation asset, because then your energy cost goes pretty close to zero, and then you are the lowest cost operator in the space, which is where everybody's trying to get to.
Fair enough. I do want to move on because there's, as I said, a couple of headlines, and then maybe if we have time, we'll go back to questions from the chat. But this also interested me. You recently partnered up with another firm to help launch a Bitcoin ETF. Now, we don't have spot Bitcoin ETFs in the US, but this is a spot Bitcoin ETF, as I understand it, that is available. Well, in some respects, it's Australian and it's also Canadian. Can you explain, first off, drop the ticker for us, and can you explain what this ETF is and how people can buy it?
Yeah, good question. You've done your homework. Well done. Basically, we launched a Bitcoin ETF in Australia last week. The code there is CBTC. It's the Cosmos Purpose Bitcoin Access ETF, and that's a lot of words. So CBTC is the ticker. And we've partnered with Gemini and Purpose Investments. So many of you will know Gemini, the Winklevoss twins, founders of that business. And then Purpose Investments is I think it's around $14 billion fund manager out of Canada, who actually launched the world's first Bitcoin ETF. And so our product buys units in their fund. And it's a way that we could get through the regulatory regime in Australia and provide easier access to Bitcoin for Australians, because it's historically been quite hard for them to get access.
This is interesting idea, because I don't know, maybe you can address what the regulatory situation is like in Australia, but I mean, is it similar to the US? Because in the US, we do not have a Bitcoin spot. We have no ETFs that are actually hold Bitcoin in and of itself. We have a couple of Bitcoin futures ETFs, and they're not quite the same thing. Is it the same in Australia?
It's slightly different. So we don't have a futures-based ETF in Australia, and as a business, we've been barracking quite hard to launch one of these products. The workaround was basically use the infrastructure from a known, trusted, much older business that's fully compliant and in tune with the regulatory side of things, i.e. we use the Purpose product, but we give sort of a pipe to that product on the Australian Stock Exchange.
And the idea here is that if you are Australian, I take it it's a little bit difficult for them to get Bitcoin, if they wanted to buy Bitcoin via like an ETF, it would be difficult for them to do so. But I take it that was the point here, right?
Yeah, so I mean, if you're in the US, it's far easier. You can just go and buy Grayscale. It's on the OTC. It does a huge amount of liquidity. It's a $30 billion fund. So that's very easy, or certainly easier for American persons to get involved in that way. In Australia, we didn't have that. We had nothing like that. So if you wanted to buy Bitcoin, you had to, go and set up a wallet and send a picture of yourself and the date. And, that's a little bit harder for some non-digital natives that want access to Bitcoin. So we made it easy enough. You call up your broker or you get online and you buy CBTC and you get access to Bitcoin that way.
It's an interesting workaround, right? Because the CBTC already has over $1 billion in management, which is $1 billion is often seen as like a key threshold. So that's a sign that the ETF that your ETF is buying has staying power and is not just something that's going to shut down in like 6 months or a year. So interesting workaround. I think people in America are maybe taking notes, I hope, on because on that, because it's an interesting idea for you can just buy and it's an ETF of an ETF of a Bitcoin in a way, right? So
that's a good way of explaining it. I should explain it like that. It's far easier. I had too many words.
ETF of an ETF of a Bitcoin. All right, and then I did want to quickly talk about your financials. You just came out with some numbers for the prior quarter. You said your revenue was up to almost $20 million in the quarter, up 170% year over year. Can you just give us a high level overview of the quarter, and then I have some questions following up on that, and the exahash as well.
Yeah, for sure. So financially speaking, revenue was 19.4 million, so up 178% for the quarter. Gross profit was $11 million, and non-GAAP EBITDA was 4.5 million, so all up triple digits. So we're motoring, and that was driven by a very large increase in our self-mining hash rate. So the number of Bitcoins we produce on a daily basis went up materially over the last 12 months, and even materially versus Q4 of last year. We also started to bring on some of our very large hosting customers. So we recently signed a 100 megawatt hosting deal with a company called Celsius Mining, which is a subsidiary of Celsius Network, which many of you might know from the crypto space. And so that hosting business is now rapidly expanding, and we'll make some noise about that next month as that hosting business comes through.
And can you speak to the exahash a little bit?
Yeah, for sure. Yeah. So we will be producing at 1.8 exahash by the end of May, which is around 8 Bitcoin. That's up from our March number of 1.3 exahash. So our operational business is growing really, really quickly. I think it's one of the fastest growing of our NASDAQ listed peers, and certainly our hosting business is the fastest growing of our NASDAQ listed peers.
One of the things, Nick, that everyone seems hyper focused on it right now, and it's not just for a business like yours, it's every business under the sun, every sector, public, private, doesn't matter, is all right. Profitability really matters right now, right? Like top line revenue was all the rage for a decade, but now it's about bottom line. What are you doing on the bottom line? Are you growing your free cash flow? Do you have positive EBITDA? All these bottom line type of metrics, type of things. And the focus has shifted there because there were some expectations that we're going into a recession. Not everyone agrees on that, but that seems to be some prevailing sentiment. So everyone seems like they're bracing for it and focusing on profitability now. Can you just talk about Mawson's profitability and your path towards that?
For sure. So on the spot, I'll try and recall. Q4, beg your pardon. I think we did operating cash flow of $14 million. And then in Q1, we did around $5 million from memory. I don't have the 10Q in front of me. And that's because we're spending a lot of money on growth. So a Bitcoin mining operation is very CapEx heavy because you want to continually grow. But there's a point in time in the future where we'll turn off that growth and just let the business hum. And at that point in time, profitability will go through the roof. But we are growing rapidly at the moment. So we are reinvesting a lot of our profits back into the business, back into more Bitcoin miners, into more transformers, into more modular data centers, into more switchgear, into CapEx onto our new sites, i.e. the Texas facility that we just signed. So we're in a growth stage. But look, we're also rational. So, you know, the world's been a pretty nasty place to exist in, financially speaking, recently. Bitcoin hasn't been immune. So we're not just growing bigger for the sake of getting bigger. We're rational financial people at the end of the day. And unlike most Bitcoin miners, we actually sell our Bitcoin on a daily basis. So we're converting to cash every day, whereas everybody else is hodling. And it means that to fund their operations, they typically have to issue new shares to fund that growth. So we're very different.
Why do you do that?
I think it's probably our background. I mean, my background sort of traditional finance, funds management, equity capital markets. James Manning, our CEO, is an accountant by background. So, and we own 25% of the business as a board and management team. So we have a lot of skin in the game, and we would prefer to sell Bitcoin every day today and fund our growth that way. It doesn't mean we won't change that view down the track. And, you know, as we roll into the back half of this year, that cash flow really starts to hum. So, you know, that's a decision for the board and management team down the track. But for the moment, we're happy selling Bitcoin on a daily basis to fund the business.
That's an interesting wrinkle here. So does the recent price action in Bitcoin, how does that affect your business at all?
I mean, so Bitcoin at 50,000 is a different story to Bitcoin at 30,000. So there's a little bit less margin there. But if you look at 2021, we sold our Bitcoin for an average of $50,555. And into 2022, that's probably sitting somewhere in the high 30s at this point in time. Obviously got another 7 months to go. So lower Bitcoin price isn't really good for anything, except what it does is it doesn't encourage new entrants to enter the space as ferociously as they have in the past. And that's good for all existing and installed miners like ourselves.
Couple questions from the chat. I'm not ignoring you guys. Like Brian Blockchain, what does it cost you, Mawson, Nick, to produce one Bitcoin?
Yeah, good question. So I'll give you the 2021 number was somewhere around $7,000 a coin. Okay. And that's on a cash cost basis. I think our EBITDA break even is around $12,000 Bitcoin. So yeah, that's putting me on the spot. So I have to go and check the financials, but I think that's approximately right.
Any more questions? Drop them in there. Do you have a? Actually, no. First, I want to address something that you said before, which is at some point in the future, you will just turn off the growth dial. At what point is that?
Yeah, so we don't have a hard date in mind, but what I would say to you is when you know, in this industry, you have something called a halving, and that happens every 4 years. Yep. That happened in 2020. And so what you get around that period of time is your revenue gets cut in half because the number of Bitcoin produced on a daily basis gets cut in half. The next halving is due to come through Q1 or Q2 of 2024. So, you know, 6 months out from that date, we'll as a board and management team get together and just assess the market, see what the best use of capital is. You know, should we sit there and hoard some cash over that period of time? You know, that's sort of the current thinking, but it'll be a board decision at that point in time.
And I think we've addressed this previously, but have you thought ever about expanding to mining other cryptos, or are you dead set on Bitcoin?
Yeah, so we've looked at this really closely. You know, in 2021, Bitcoin mining revenue was $15 billion, up from $4 billion a couple of years ago. So it's expanding. You know, it's a big market. The daily liquidity for Bitcoin is enormous. So it's a really good market for us to be in that context. We looked at mining Ethereum, but as a board and management team, we couldn't hand on heart, you know, allocate $50 or $100 million to that protocol because it's going through a major change later this year from proof of work to proof of stake. And, you know, we don't know what's going to happen then. So we'd hate to, you know, throw shareholder money down the toilet if that doesn't pan out as people expect.
Yeah. I think it's a pretty well thought out answer. As far as the Bitcoin that you do mine, what is the strategy there as far as like what you sell, when you sell it, how much you sell, how much you don't sell?
Every day, we're sort of agnostic. You know, we accept that one day we're going to, you know, sell it at a great price in the morning, and the next day we'll probably hit the low of the day. The next day we hit the high of the day, but we just sell it every morning. Okay,
so just consistent all the time. Awesome. All right, Nick. Anything else we need to know that investors should know about Mawson here in the next few months, back half of the year?
Yeah, for sure. So look, we've committed to a monthly operational update every month. So that comes around sort of the 10th to the 15th of each month. We've obviously got 4 quarterly updates. We just announced a brand new site in Texas. We do have another site in Sharon, Pennsylvania, and that's in the 10K, so that's not telling you anything that you shouldn't know. We've signed a 15-year lease there. We're doing a load study on that site. When that comes in, we'll make some more noise around that, and we hope that that's very exciting. We're always assessing the market for new purchases of Bitcoin mining machines, and what I would say to you is that the price for Bitcoin mining machines has come right back with the Bitcoin price and some of the pain that's out there in the industry. So, keep your eyes peeled for that. And that's probably enough to keep everyone satisfied. I got a question for you though, Israel.
Oh gosh, what?
Is that a Bored Ape up in the background there behind the ice cream cone?
Yeah, listen, I share this studio. I'm not the only one that uses the studio, so that is a Bored Ape. No, it's not. It's not a real Bored Ape. It's a fungible Bored Ape. Let's call it that. Nick Hugh-Jones, Chief Commercial Officer of Mawson, and Nick, I guess if there's a silver lining of the price of Bitcoin going down, it's the price of the mining equipment going down with it. So something to hang your hat on, I suppose. Nick, appreciate the discussion as always. Have a great rest of your day, and thanks for joining us on All Access today.
Thanks, Israel. Thanks for having me.
All right.
Bye-bye.
All right, that is gonna be it for this rather abridged edition of All Access. Once again, as a reminder, this show is sponsored. Both companies on today's show did pay Benzinga to be here, but they had no idea what we were going to talk about. I mean, they assumed we were going to talk about their business, but they had no idea what I was going to ask them. They certainly didn't know what you were going to ask them. So I hope you guys got some value out of that. And once again, as a reminder, this show is sponsored every single week by Ticker. TIICKER.com. Check it out.
What is Ticker? That's right, Ticker with 2 I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
Go to the link on the screen, ticker.com/Benzinga, create your account, connect your brokerage, and after 30 days, they will send you a $20 Amazon gift card. That's how it works. All right. Thanks to both our guests today, Joe Hayon and Nick Hughes-Jones from Inspira and Mawson, respectively. Thanks to all of you in the chat. Going to take a little break here. I'm going to hop back on in like an hour and a half or so-ish for Benzinga Live. Got a big show planned today, so stay tuned for that. That'll be at 11:30 p.m. That'd be weird. 11:30 a.m. Eastern Time. YouTube.com/Benzinga is where you'll find all of our shows. And let me make sure I don't have any other announcements. No, I don't think I do. Hey, smash that like. Where are we on likes? I don't want to leave just yet. Where are we on likes? Come on, YouTube. 76. Can we get to 100? Let's get to 100. I think we can do it. Then we can do it. 100 likes. And then I'll be happy, or happier, I should say. All right. Before I go, I have to just take a quick look at the market from the open. How are we looking out there? Oh, we've leaked continuously in the last 40 or so minutes. That's appropriate, isn't that? That's appropriate. That's an appropriate way for the week to end. We were up a little bit overnight. Just nope, not gonzo. I mean, we're still green, but at this rate, not for long. We'll talk about that more on Benzinga Live. So, everyone, I'll see you in a little bit. Enjoy the rest of your day if I don't see you, and smash that like.